the dollar for trade payment. And they've got deals to supply diesel and gasoline to Western Europe. And France just signed a Russian gas deal. France. Okay. We're seeing the beginning of the breakup of the Russian sanctions. The BRICS are an interesting crew. They're so interesting that I'm calling it the precursor to the global trade union that knocks down trade barriers. And the US better be careful because the Five Eyes nations might be embargoed. England, United States, Australia, New Zealand, and Canada. The Five Eyes. What do they have in common? Support for the attacks on Gaza. This is going to be manifested in trade embargo if they're not careful. Right now, the embargo is for the Suez Canal. And you know, there's so much more. I think that many of the foreign nations that include some of the BRICS are getting trade payment credits from crude oil coming from the United States.
Yeah, I remember we mentioned that. Yeah.
And you know, not too many analysts are talking about that. If they don't want the treasury bill, they might take crude oil. It's a hard asset. You know, some people don't get a little confused. A hard asset does not have to be a metal. A hard asset has to be tangible.
Tangible. Yeah.
You know, I made a joke when I started the newsletter in 2004. I said the United States has 1/3 of the global coal supply. Why don't we go on a coal standard? I'll tell you why. Because we're a deficit nation and we'd lose all our coal. We'd rather go on a bullshit standard, a standard of lies. And we're being called on it, and it's going to end up with a treasury default. I'm going to repeat my forecast. This summer and probably late summer, we're going to have talk and debate of a debt default.
And is that what you refer to as, like, because you were talking about how just this paradox where these countries, all these foreign nations, they dump their treasuries, they buy gold, they watch their own currency devalue in the process, like Japan being the glaring example. That was what kept Project Sandman in its original form, let's just say, up on the shelf. They decided maybe that wasn't such a great idea, but you said it at a certain point that so the dollar rises, and then vanishes. And so my question is, what's the vanishing point? What's that look like? Is that the conversation that you're talking about right now in the midsummer about this debate of a treasury default? Are we talking about the same thing here? What is that vanishing point? Where is the moment?
To me, the vanishing point is when the BRICS gold token has some critical mass. And right now they haven't even launched it. What they're settling right now is a cornucopia. They're doing digital ruble. They're doing digital yuan. We're soon going to see a digital Persian rial. We might soon see a digital Saudi rial, gold-backed. And then later, hey, let's make something more common. We're going to do like trade between Saudi and, let's just make up something, Saudi and Brazil. They might go with the Saudi gold real digital form on the blockchain. Okay, I don't know. I'm just making an example. There's a lot of trade between Saudi and Brazil. Could be Argentina, a South American giant. Brazil is much bigger than Argentina. It's actually about 8 times larger. Brazil is very large.
A lot going on in Brazil too. We don't have to get into it, but there's a lot going on in Brazil.
Yeah, I don't want to open up a whole new room, but they got 200 million people, and they got tremendous soccer football.
Yeah, indeed. All right. So yeah, so when the gold tokens that you're talking about, when they hit a critical mass, you're saying that's really going to be the vanishing point for the dollar.
You're going to have such great momentum. By then they might be over half done by selling foreign treasury bonds, foreign held treasury bond. But keep in mind, like a monarchy nation like Qatar, if they sell treasuries and buy more gold, I don't think that hurts their currency. I don't think they've got a dollar basis. They're not an IMF dollar basis currency. The major Forexes are unique. The major Forex currencies are all dollar basis. They're all dollars with a different jacket on.
Mhm.
Okay, it's very weird stuff. When we created the dollar currency and the forexes that are extensions, we did something bizarre. They're all dollars. They're
Mhm.
all dollars. So they just got a different code on. It's very hard to wrap your head around. But let me give you another example. A French firm, I've mentioned this example before. They're called Amundi. Amundi is the French BlackRock. They're a
Okay.
private equity firm. They're a very giant firm. They got about 3 trillion in assets.
Okay.
They announced close to a year ago they were going to divest all dollar assets. Now that is not a central bank, Patrick. They're going to dump their dollars and they're going to buy, who knows, euro bonds. Maybe they'll buy up, distressed euro economy factories.
Now,
That
was
they
that
know
part of
are,
the European Central Bank war with the U.S. Central Bank? Remember, we were talking about that several months back.
yeah,
That
that's
decision, because
more like
that's the BlackRock of Europe. That's pretty significant.
yeah, there are a few of them, but they don't have anything like BlackRock. BlackRock is fed by narco money.
Right, right. I know. I'm just in terms of size, power, money, influence, and is what I
Yeah,
mean.
well, the Mundi is like 3 or 4 times smaller than BlackRock, but it's enough to make a dent if they get rid of stocks. Okay, here's something very wrap your head around and keep in mind. Foreigners own $7 trillion of treasury bonds. But if you add together treasury bonds, corporate bonds, and stocks, it's 34 trillion. It's the same as our debt.
Yeah, same number. Yeah.
Big numbers. And if they say, well, we're going to get out of the US stock market because there might be a crash that's triggered by the bond default. A bond default has cataclysmic impact and consequences. And
Yep.
the biggest is it'll kill a lot of financial markets in the United States. We've already got a corporate bond market that's dead. We've already got a mortgage bond market that's dead. What you've got, the last guy standing in the bond market is treasuries, and they ain't looking very good
No,
lately.
no. I think the last time we spoke, you said they were on the hook. Low maturity yields this year alone, like 7.5 trillion, 8 trillion, something along those lines.
8 trillion for long dated maturities.
A long dated.
Long dated. 8 for long dated, 2 trillion for short dated.
Okay. Wow.
And they're maturing this year. And this is something we cannot handle without the ESF
Right.
coming to the rescue. And I don't want to talk about the ESF. That's
Can I
a
ask
topic.
you? Can I ask you?
It's
Oh,
a
sorry.
topic my colleague Rob Kirby murdered.
Right. I know we don't really touch the ESF. We kind of mention it and then we step away from it, which I totally understand. We are hearing a lot about, at least from the mainstream media, and I'm curious to hear your take on this because there is indeed a conversation to be had, but we're hearing a lot about the commercial real estate factor. In terms of causing a major economic downturn. Is there anything that you want to say on that front? Because certainly the commercial sector has been savagely hit. We're seeing that happen all over the globe. Are you seeing that as sort of a byproduct of the underlying issue, or is there something substantive there that we have that folks should understand about that aspect of the equation?
I think the corporate real estate market is sufficient to bring down the U.S. banks. Well, we're likely to, we haven't talked about U.S. banks. Here we are, an hour and 10 into it. We have not mentioned U.S. banks. They're caught in the middle. They're caught in the middle of the government debt default that's threatening. And on the other side, they're caught with bond decline in value. They got unrealized losses in their portfolio. Isn't it interesting? Every time you hear about the unrealized U.S. big bank portfolio losses, they never say it's primarily treasuries. But when you get analysts talking about it, they say, well, they're treasuries that were bought way back with the 2%, the 2.5%. Those are down 40%. Okay, so you do get analysts who are chiming in and giving good interpretations. But the commercial real estate is in such a bad condition that we might see, let's just say region by region, BlackRock and Vanguard coming in to buy up distressed commercial real estate. And at the same time, they're buying up residential mortgages. And there are a lot of rumors that BlackRock was in bankruptcy, but they're still operating. If you can explain that, you're a better man than I. I think what it means is that they're in restructure, but we're never told what their structure is.
Yeah, they're being restructured behind the scenes, I think.
I think the BlackRock restructuring is they're trying to figure out different sources of narcotics funding that they can bring to the fore. I think they're going to use narcotics funding to buy residential real estate across the United States with complicity from the insurance companies. I have had about a dozen clients tell me that their home utilities, like electric, gas, cable, and internet and insurance, when you add insurance, their home costs are more than double, and their insurance is the biggest increase of all. One guy in California said, I used to pay $2,500, now it's $7,000.
Wow.
You had State Farm Insurance announce they're no longer going to do fire and hazard insurance in the entire state of California. Is that to bring about more foreclosures and losses for the homeowners so that BlackRock can come in there and buy it for whatever is on the debt? Okay, if you got a $250,000 property and half of that is debt and half of that is your equity, then you lose your 125 in equity. And whoever wishes to put up the 125 can buy from the bank. And that's, I think, going to be BlackRock. BlackRock, I featured this in the March report. They're doing build to rent communities now. They might have a complex where they make 30 little houses or 30 pairs of houses. So they're 60. So left, right, left side, right side, not exactly a condominium, but a cooperative where there's a big house that's divided down the middle. Lots of inventive designs, but they're not intending to buy, not trying to find buyers. They're building to rent.
Yeah. Yeah.
And what we might see if we lose control of this is we might see BlackRock and a few of their friends owning a significant portion, like 10, 20% of residential in the United States. And they can dictate the rent. And then they can do really strange things like order iron grates on the windows and then dictate the terms, not of key, but of key cards.
Yep. Well, that's the direction they want to go. Question is, are they going to get there?
Prisons. Okay, that is a threat. I'm not saying it's going to happen, but that is a threat. We better get a handle of BlackRock and Vanguard because they dominate. Vanguard dominates in the 401k sector. Okay, when I was in my last job, it was a Pennsylvania-based consulting firm. I went to the office where they handled the 401k, and I said, "What do you got for offerings there?" And they said, well, "We have an S&P fund, we have Vanguard, and we've got a bond fund." I said, "Anything else?" And they said, "Well, just variations on those three." And I said, "Well, what if I want to have something like a gold mining stock?" "Oh, we don't offer that. If you want stock, it has to be S&P or a Vanguard."
Yeah.
Okay, it's everywhere. It's everywhere. Vanguard is everywhere in the 401k selections. So if you're wondering who issued the health mandates, it was BlackRock and Vanguard. I did some research. It wasn't hard. I basically read articles that came my way. Vanguard doesn't own more than about 7% of any company, but they're the biggest shareholder. And what you get is the individual shareholders, let's just say company X, like say General Electric or something like that. Vanguard owns, let's just say it's 5%. Well, what about all the different groups that own 0.25%? Well, if they would just organize and come up with a single representative that owns 15% of General Electric, then they could say to Vanguard, go shit in your hand.
Mhm.
But they're not organized.
Mm.
So Vanguard makes the rules. They're the biggest shareholder. And it's not fair, it's not right, but it's the reality. Most of the shareholders for companies like General Electric are not organized. They don't make a voting block. That's what it's called.
Mm.
Okay.
That could be part of the Great Awakening as well.
The big banks, I believe, are going to work toward a situation where they're going to buy up a lot of gold. We're trying to solve the question now, the riddle. Who's buying the gold in the United States? Who's buying it? I think it's the banks, and I think it's also the Fed. The big banks are buying gold. I do not believe that the U.S. Mint reduced their output. I don't believe it for a second. Why would they do that? They're under law to meet demand. Well, what if they lie to us and say there's not enough supply, so we're cutting back to 50% in the gold eagles, and the same for silver eagles? What if the other 50% is the Wall Street banks? Then they're meeting demand. So the operators of the US government, namely the big banks, do not prosecute the US Mint for violating the charter because they are meeting demand. It's just 50% of the demand is not made public, and it's the big banks. Okay.
Mm-hmm.
The big banks might see that if they gather together a tremendous amount of gold reserves and in their secondary books, that if we go up to 5,000 gold, they're going to relieve a lot of their pressure. And I've got to mention the Zijlstra formula. The guy, it was a Dutch banker. It was the mid-1990s. He had finished his term as the Basel BIS, Bank for International Settlement. He was the chairman, and he was interviewed after his time as chairman. And he was interviewed, and he said, well, first he had a quote, if the United States has a problem with $240 million in a gold request, then your problem is much bigger than that transaction. That's from Zijlstra, 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 Dutch. And what he said was, there's going to come a time, it could be a couple of decades from now. He said this in the mid-1990s. There could come a time when the main central banks, he's referring to the Rothschild franchise, the main central banks are going to find themselves in a very difficult, insolvent situation. And the only way out for them will be to quietly acquire a tremendous amount of gold and then send it to 3,000, 5,000, then 10,000, and that will relieve their entire insolvency. I'm here to tell you that I believe that it has begun.
Wow. Okay.
I don't have any proof. I don't have any proof at all.
Like, okay.
But you know what's funny? I'm not talking out my ass.
I don't think you are. No, I didn't say that. No, we're just having a laugh there. That's okay.
What we're seeing is the central banks are showing a big increase in their official central bank gold holdings. What they're not showing you is their unofficial central bank holdings, because these central banks are privately held and they don't owe you jack shit for information about what they're doing off their books. Off their books are private books. You got a private corporation, then you can show your books to your shareholders. And who is the Fed shareholders but Wall Street banks? And JP Morgan is 35% shareholder. They no longer have these Swiss trillionaires like Warburg and whoever, Rothschild. They don't own the Fed no more. I use a double negative for the effect that it sounds kind of cool. They don't own no more. They're out. And Wall Street owns it, which means Wall Street governs the policy.
Mm-hmm.
And JP Morgan has the biggest vote. And I believe they're building up their gold reserves. And I think that once, let me get back to the gold price stuff, that topic. Once we get over 2,500 gold, we're going to see silver launch above 30 and move toward 50. Probably within, it probably could be anywhere between 2 and 4 or 5 weeks.
Well, that's exciting. 2,500 is a key marker then.
To
All right, we'll
$50.
keep an eye on
So
that.
remember Fibonacci, 10, 20, 30, 50, 80. I kid people. I say, if we got 10, 20, 30, 50, 80, what's after that? Don't think too hard.
Oh, you're riddling me.
130.
Okay. Now math is my strong suit. That's why I have you on.
10, 20, 30, 50, 80. 50 and 80 is 130. Okay, this is gonna be lightning quick.
That's exciting. Wow.
50. Now, let me finish. Once we get to 2,500 gold, we're gonna see the move, I believe. I'm just speculating, okay? I'm just talking as though I've had a couple of rum and cokes. We're gonna have a distraction with silver going to 50. And then I think the central banks are going to step in and say, look, we're all long. We're in. Let's make it 3,000 next week. Okay. That's where you get what they call the discontinuous movement. We got over 3,000. Oh my gosh, this is tremendous. Here we are, we're getting into the election. It looks like we might have a debt default. This is really getting weird. Donald Trump is going to win. Donald Trump did win. Donald Trump is talking about debt default. Donald Trump is talking about resolution. My gosh, there's a gigantic movement. We're up to 3,070, and we're dicking around between 29.50 and 30.70. And my gosh, what's going on? The next thing you know, whoop, we got a decision to make it 5,000 to bring about more stability. It ain't going to be for stability. It'll be to rescue the banks who have built